Welcome. I'm glad you're here. This program gives you a practical foundation in AML and sanctions compliance, built around how the work actually gets done inside a regulated firm. Not the theory, the job. Here's something I tell every junior analyst I train. Financial crime compliance isn't about memorizing laws or reciting definitions. It's about risk judgment. A firm needs to know who it's dealing with, understand why the relationship exists, watch how money moves through it, screen against sanctions lists, notice when something doesn't add up, and escalate when the facts stop making sense. That's the whole job, really, dressed up in a lot of terminology. Throughout this course, you'll be looking at compliance from the seat of an analyst. You'll learn to read a customer profile, compare what was expected against what actually happened, spot the gaps, flag what's off, write your reasoning down clearly, and recommend a sensible next step. That last part, writing it down clearly, matters more than people expect when they're starting out. We'll cover AML, CFT, CPF, and sanctions, and along the way, you'll pick up KYC, customer due diligence, risk assessment, transaction monitoring, suspicious activity escalation, and crypto AML. By the end, you should be able to explain the core concepts cleanly and apply them to realistic, beginner-level scenarios. Your job is to identify concern, back it with facts, and push it to the right person through the right channel. Get that part right, and you'll already be ahead of most new analysts I've trained. I built this course as a journey, not a reference manual. There's a reason the sections go in this order. We start with the language of financial crime. You need the vocabulary before anything else makes sense. From there, we move into how laundering actually works, how regulators think about AML and sanctions, and finally, how firms apply controls to real, messy cases. The early sections separate AML from terrorist financing, proliferation financing, and sanctions. Four things that get lumped together constantly but aren't the same. I've seen analysts lose time and credibility by treating these interchangeably. Knowing which risk you're actually looking at changes your escalation path, the evidence you need, and sometimes the legal exposure involved. The middle of the course is where the practical controls live. KYC and CDD, identifying beneficial owners. Why source of funds and source of wealth are two different questions, and how customer risk rating actually works. You'll also learn how sanctions alerts get reviewed and why, frustratingly often, a name match by itself tells you almost nothing. A practical note from experience: go in order. Each lecture leans on the one before it, and skipping the worksheets and quizzes is the single most common way people waste this course. Judgment in this field comes from repeated case review, not from reading definitions twice. The terminology in this field can feel like a wall when you're new to it. Don't try to absorb all of it at once. Start instead with the handful of questions a working analyst actually asks on every file. Question 1. Who is the customer? That means identity, ownership, control, what the business actually does, and what behavior you'd reasonably expect from them. Question 2. What is the customer actually doing? Here you're looking at real activity, transaction patterns, who they're dealing with, which jurisdictions are involved. Question 3. And this is where judgment starts to matter. Does it add up? Then, what risks are in play? Money laundering, terrorist financing, sanctions exposure, fraud, corruption, proliferation financing, crypto risk? What evidence do you actually have to work with? Documents, screening hits, transaction data, the customer's own explanation, and finally, what happens next? Closure, a request for more information, enhanced due diligence, a restriction, escalation, or exit. If there's one habit I'd ask every beginner to build early, it's this: keep your language clean, separate fact from assumption, strip out anything emotional or accusatory. Never write that the customer is laundering money. That's a legal finding, and it isn't yours to make. Write what you can actually evidence instead. As you go through each topic, keep asking yourself, how would I use this in an actual file review? That question alone will get you further than memorizing any definition. Financial crime compliance sits right up against law, regulation, risk management, and law enforcement, which is exactly why the professional boundaries here matter more than in most jobs. Everything in this course is educational. It is not legal advice, not regulatory approval, and not a substitute for your firm's specific instructions. AML and sanctions obligations shift depending on jurisdiction, business model, product, customer type, internal policy, and the specific facts in front of you. A decision that's correct at one firm can be wrong at another, simply because the legal duties or risk appetite differ. There's also a confidentiality boundary worth being explicit about, especially now. Real customer information, names, account numbers, wallet addresses, ID documents, investigation notes, has no business in training environments, public forums, or AI tools, unless your firm has explicitly cleared it and the data is properly protected. I say this bluntly because I've seen well-meaning analysts get this wrong. Language is a boundary too. You don't accuse customers or counterparties of crimes. You describe risk indicators and escalate where the facts warrant it, using neutral, evidence-based language. And always defer to your firm's actual procedures. I'm teaching you principles and the judgment to apply them. Your employer decides how those principles translate into your day-to-day role. Financial crime compliance at its core exists because criminals need somewhere to put their money. They need to store it, move it, hide who owns it, convert it into something else, send it across a border, or simply make it look earned rather than stolen. The discipline exists to make all of that harder. A working framework usually includes policies, procedures, risk assessments, customer due diligence, sanction screening, transaction monitoring, reporting, governance, training, and quality assurance. None of these work in isolation. KYC tells the firm who it's dealing with. Risk assessment decides how closely to look. Monitoring catches behavior that doesn't fit the profile. And escalation routes the genuinely unresolved cases to someone with the authority to act on them. If there's one thing I wish every beginner understood from day one, it's this. Financial crime compliance is not a checklist exercise. A checklist gets you the information. Judgment is what tells you whether that information is complete,